How's it going? Hey, whoa, that was a fog because we got some clear-headed business to do. My name is Andrew, that's Professor Meatball, and we have major GameStop news. This is a summary of what you need to know about GameStop before market opens on Monday, March 8th, and that is something that I do not say lightly. We are about to face a big old battle. Right now we have GameStop hovering pre-market at $154. It has met the resistance level of 158 twice during pre-market. Does not seem like it can be it can surpass it. We even have Brandon on the top left saying we gotta buy $4,000 if we hit 35,000. We did. Congratulations. Thank you guys so much for getting us there. And we even have Melvin Capital coming in the chat and saying, please stop this. Melvin, we are not going to stop. GameStop is not going to stop. It's part of the name. We are going to bring ourselves into the most important news, including the fact that, GameStop taps a shareholder, Ryan Cohen, to lead e-commerce shift. So Ryan Cohen is brand news in the news. We also have some DD specifically about the DTCC ruling on GameStop. We're going to break it down. This is a lot of language, but really, most importantly, we have the actual important part right here. So we'll read this section, and then finally, we're going to go and look at just a comprehensive overview of the Squeeze DD, and this is going to be just everything you need to know about what's going to happen this week. Market is about to open in about 8 minutes, so I don't have a lot of time. I got to tell you everything there is to know. First off, Ryan Cohen is tapped to lead the e-commerce shift, says Bloomberg. Let's see. GameStop core has been, Ryan Cohen has been, let me see if I can make this easier for you to read. That's harder. Let's open this up a little bit. There we go. Okay, so Reuters, GameStop core has tapped shareholder Ryan Cohen to lead the company's transition to an e-commerce business, Bloomberg reported, citing sources familiar with the matter, setting the video games retailer's share up 13% on Monday. That's just pre-market activity. Cohen, a board member who has been pushing the company to move away from its traditional brick-and-mortar model, will chair a new board committee, says Bloomberg. The committee will look to hire executives to lead its customer care and e-commerce fulfillment centers, as well as finding a new chief financial officer, because after that guy left, GameStop jettisoned up 300%. So it's probably likely that that's going to cause another big ripple. GameStop, which has become the most visible of the so-called meme stocks, did not immediately respond to a request for comment. Last week, Cohen, who is a major shareholder of GameStop and founder of e-commerce firm Chewy.com, posted a cryptic tweet of an ice cream cone, and then he posted, I guess they didn't want to talk about posting a picture of a puppet from Pets.com. Cohen's RC Ventures activist firm reached a settlement with GameStop in January, giving Cohen seats on the company's board. The company's stock surged more than 1,600% in January, and if you guys remember that, we explained the Gamma Squeeze in plain English on this channel. Go ahead and check that out. Shares were almost at $156 before the opening bell, and they are currently hovering at $155 and change. So that is part one. Now that you guys have part one, let us make sure that we cover what the DTCC means. A lot of you have seen that video, almost like 30,000 of you, which means we want to make it dumbed down and simpler to understand than before. So all we need to understand here is this. The proposed change would allow them, the DTCC, to send an SLD back the next day. This is just like an IOU, you owe me kind of bill, instead of holding it for 90 days, which may assist liquidity in the market, but we don't care about that. As a theoretical example, the NSCC could turn to someone like Melvin and say, hey buddy, you're on the hook for what we calculate as a price spike, like for AMC or GME, to $100 while you're short at $4. If they sold a borrowed share at $4, then they would be short at $4 times 500,000 shares. Therefore, pay us the difference, $96 times 500,000 as insurance. Thanks. Oh, you have to make this payment within 1 hour of notice. Don't worry, we'll notify you an hour before the market opens. This is actually in the document. So hopefully you understand this makes it much harder for the hedgies to wait until the tides turn in their favor and continue to manipulate the market. They only have an hour to do so. It's like an hour to die, except that this time it's an hour to give us back our money, dumb hedge funds. Now it is the final part of this DD, which I hope you understand is going to be a little more comprehensive, just so that you guys understand. You guys got the meat in the first part, and we're going to get the potatoes in this next part. Good morning, good afternoon, and good evening. General squeeze theory. There are short squeezes and gamma squeezes. Yesterday's Forbes article talked about this pretty extensively. Short squeezes, evil hedge funds and market makers sell a stock which they don't have and hope that they can buy it cheaper. Now the price goes up. This is pretty obvious. Hedge funds have to cover to cut their losses. Otherwise, there is a risk of unlimited loss if they wait so long to get margin called because their broker is in fear they can't cover anymore, and no one wants to get margin called. We covered this. This is just a force. Give me back our money or else kind of situation. Gamma squeezes, evil MMs and others sell far out of the money call options. Now the price goes up and suddenly those options are in the money. Market makers now have to buy the stocks because this is something called a naked option, right? This is something that is essentially, I'll give you the option to buy this, but I'm not buying it myself. I'll buy it later, which is, you know, risky. For this to happen, you need to have a higher numbers of out-of-the-money options sold at certain strike prices, just enough that the next strike price is reached. It is more likely that lower strike prices are reached, and therefore this is kind of like a snowball effect. As higher strike prices are reached, more strike prices become in the money. It's an unstoppable force, and we are currently meeting a previously immovable object known as the hedge funds, but we are moving them. Let's get some scissors in the comment section down below to make sure that we are heard. Cut those paper hands out. We do not need them. If you want to go deeper, I suggest you look at Natural Professions post. He did a formula which you can calculate to have the biggest leverage with the option buying. Means that market makers have to buy the most shares with the purchase option with a certain strike price. Let's apply this to the GME situation to be specific. The short squeeze, sorry to say that, but they don't think a squeeze solely because of shorts covering will be happening anytime soon. You have all seen how the short interest has dropped from the legendary 226% to the last FINRA report, which you guys all saw with us live. It was at 60%. That there is no volume. Well, look at the numbers. GME has an average volume of 49 million per day. And if you guys have been following the live stream, you guys know we have the volume right here. Even before the markets are open, we have almost a million that had happened pre-market already. So the stock with roughly 70 million shares outstanding, that's a lot. Amazon had 3 months average volume of 3.73 million per day with roughly 7x the shares outstanding of GME. There was enough volume. But what is this institutional ownership situation? You all probably have seen the post where it said institutions solely hold X times outstanding shares of GME, so there has to be a massive short interest, right? But what do these posts are missing? Well, they are often reporting delays in between ownership filing, which is causing these high numbers. If you compare it again to Amazon, you also see institutions owning 1.5x shares outstanding, right? So this is because there are a lot of duplicates because of reporting delays. With that said, the amount of GME shares held by institutions seem suspiciously high, and there are other things that can be reported by 111% short interest in XRT or the still abnormally high short interest in GME. We've covered these all before in previous videos, especially look at the XRT video if you haven't yet seen that story. So with only 2 minutes left before market opens, let's cover the gamma squeeze quickly. In fact, the gamma squeeze is when we have whales that want to put up, including the one that had $100 million call option previously last week, that is saying, hey, I think it's going to go to this price and I would lose out on a lot of money. So now I'm a big boy playing a big boy game and I do not want to lose. For example, look at this one. This is the one we're specifically talking about. 1.86 million shares at $55 is $102 million, and 2.9 million at 120 is 348 million, right? They have to buy a premium, so that's therefore they are already ready to pay a lot of money for this. So finally, shorts need to be bought back by market makers if GME hits $300 for options expiring in 312. This is important. We've covered this before. Shares need to be bought by MMs if GME hits 190 for options expiring in 319, and that is quadruple witching day, which we've covered very extensively in the past. Too long didn't read. If GME $190 before witching day, gorillas on the moon Possibly. As always, take all DD with a bucket of salt. Enjoy the fact that these guys are giving the stream life with their wallets. Thank you so much for supporting the stream, Meatball the Professor, Meatball the Space Legend, and now let's see the market open. 152 right out of the bat, and I will see you guys on Space.